Okay. This is a question of October, November 2018, paper 33. Can you read the question, please?
According to IAS 1, presentation of financial statements, notes to the accounts should be included within the financial statements.
State three
State
advantage to the shareholders of including notes to accounts within the financial statement. So can you give me 3 advantages of having the notes to account in the financial statements?
They provide additional information about certain amounts in financial statement.
Like in your notes to accounts, you will have additional information.
Yeah.
What is the use of that additional information?
Uh, it explains like certain items in the financial statement, like what depreciation policy and
And
valuation.
valuation of inventory and
Depreciation valuation of inventory.
about some adjusting events, about some major events that happened after the balance sheet date.
Yeah.
They may also give you further explanation of some specific item which is not, you cannot easily understand by the financial statements. And notes to accounts ensures that there is transparency of the financial statement figures. Correct?
Yes.
Okay. Now you have additional information. Can we read it?
The following information has been extracted from the property, plant, and equipment note to the financial statement of SPLC for the year ended 30 September 2016.
Okay. So how many non-current assets do you have?
We have 3 non-current assets:
What are the 3 non-current assets?
land and building, fixtures and fitting, and motor vehicle.
Okay. Come on. What do they want from you? They want
Calculate the depreciation charge.
they want the depreciation charge for buildings, fixtures and fittings and motor vehicle, correct?
Yeah.
You need the additional information.
The cost of the land was 40,000.
Yeah,
During the year ended 30 September 2017, the following events occurred.
yeah. This is related to fixtures. This is related to motor vehicles. So first we can see things that is related to building. So I can calculate the depreciation on building. Can I do that?
Yeah.
What is the depreciation on building?
They have mentioned 5% per annum straight line method.
Straight line method, that means on cost. So what is the cost of building?
It is 200,000.
Okay. Land and building is how much?
Oh no, wait, land and building is 200,000.
Land
Building would be
200,000. From that, your land is 40,000. So the cost of building is how much?
160,000.
160,000. And how much percent on it?
5%.
So it will become how much?
8,000.
Depreciation of building is done. Yeah.
Yeah.
Now I will do what?
Fixtures and fitting.
Depreciation of fixtures and fittings. What is the policy for fixtures and fittings?
15% per annum straight line method.
Okay. It is straight line method and 15% per annum. Is there any event that has happened for fixtures and fittings?
Yeah, they've purchased a new one for 20,000 on 1st
They have
January.
purchased a new fixture and fitting for 20,000 on 1st of January 2017. This is for the year ended 30th September 2017. 16, and they want for 30th September 2017. Are you with me?
Yeah,
So what was the old fixtures and fittings that we had?
it was 95,000 cost.
Yeah. The initial one was 95,000 into 15%. Is there any policy of full depreciation or no depreciation?
It says depreciation is charged on monthly basis.
Where is it said? Yeah, fine. What is the new fixtures and fittings that you have purchased?
20,000.
For how many months have you going to use it? Jan, Feb, March, April, May, June, July, August, September. 9 months.
Yeah.
So what is the depreciation for the first one?
Um, it is 2,250.
For the second one is 2250. So what is the total depreciation?
16,500.
16,500. Now you have depreciation for what?
Motor vehicle.
Now you have depreciation for motor vehicle. What is the policy?
20% reducing balance method.
20% reducing balance method. Okay. So you had motor vehicle which had cost 10,000, was sold for 7,000, and there is loss on disposal of 1,000. Okay. So you had a motor vehicle which was disposed of, right?
Yeah,
Okay. So what was the cost of that motor vehicle that is disposed?
it is 10,000.
10,000. So the cost of the motor vehicle that was disposed was 10,000. Are you with me?
Yeah,
Okay, fine. When was it disposed of?
July, 1st July 2017.
It was disposed of on 1st July 2017. That means from October to July, you are using all of these motor vehicles?
Yeah,
Okay. So from October to July, you can calculate depreciation on the existing motor vehicles currently.
okay, yeah,
October, November, December, Jan, Feb, March, April, May, June, July, 10 months. So 30,000 is the reduced value. Yeah.
yeah,
Into how much percent?
20%.
And October, November, December, Jan, Feb, March, April, May, June, 9 months. Yeah.
Yeah,
Okay, fine. So 9 months, you're going to charge depreciation on the full value, 4,500. Are you with me?
yeah,
Now on 1st July, now you have to calculate depreciation for the remaining assets. On the 1st of July, an asset which had cost how much? 10,000.
10,000.
I don't know the accumulated depreciation on that asset. Do I know it?
No,
So that book value also I don't know. This was sold for how much?
7,000.
And when I sold for this, you had a loss of 1,000.
Yeah,
So can you tell me the net book value of the asset that is sold?
6,000.
If the net book value is 6,000, see, when you're selling at 7,000, you're still making a loss of 1,000.
Okay, wait. So it's 8,000.
Yeah. So the net book value was 8,000. You sold for 7,000. So you're getting a loss of 1,000. Yeah?
Yeah, yeah.
Yes, are you sure?
Yeah,
So what would be the accumulated depreciation on the asset that you have sold?
2,000
2,000. This you have sold on what date?
on 1st July 2017.
On 1st July 2020. And that means on 1st of July, when you disposed it off, you had got a loss of 1,000. So this is the net book value on 1st of July.
Yeah,
This is the accumulated depreciation on 1st of July.
yeah.
Okay.
Okay.
So when I want to find out the net book value of my remaining assets, so from the cost, I will minus the costs. Are you with me?
Yeah,
From the accumulated depreciation, I will minus the accumulated depreciation. That is how much?
2,000.
So what would be the net book value of my remaining assets?
23,000. Oh, wait.
1 minute. Huh?
Miss, is it 30,000 or 33,000?
33,000. Sorry, my bad. 33,000 minus 11,000. So it will become how much? 22,000. Are you with me?
Yeah,
So the remaining assets net book value is how much?
22,000.
Multiply by 20%.
20%. Miss, I have a question.
Yeah, tell me.
This accumulated depreciation won't include the entire 2,000, right? It will only include till 9 months, right?
No, darling, listen to me. Okay. I am calculating the accumulated depreciation up to 1st July because I have the net book value on 1st of July.
Yeah,
So from the cost, I will minus 10,000 cost.
yeah, okay.
From accumulated depreciation, I will minus accumulated depreciation because when you make your provision for depreciation account, okay, when you make your provision for depreciation account, you have the opening balance 13,000. Okay. Then you will add
Okay,
the accumulated depreciation of the current year on the asset sold and then you will remove everything. That means of the last year and current year, both you will remove. So this and this gets wiped off.
okay,
Okay. So this is the net effect that we are talking about.
okay,
But they have given us the information other way around. That is why we are doing it other way around. So from the total accumulated depreciation, I am removing full depreciation of the asset that is disposed of. So I will get accumulated depreciation of remaining assets. I am finding the charge of the month, charge of the year.
okay,
Understood? So because the 30,000 net book value I use full year. So for full year, 9 months. So for 9 months, I'm charging for those assets. Remaining assets I've used only for 3 months. For 3 months, I will find the charge of the remaining assets. Are you with me?
yeah.
If you want to do it the other way around, you want to do it? But I should know the net book value of the assets on that on the 1st of October. But I don't have it on the 1st of October. If I had the net book value of the assets on 1st of October, I would have the accumulated depreciation of that assets on 1st October. Are you with me?
Okay.
So that is why
Yeah.
you can't do it other way around. So can you tell me the depreciation for remaining assets?
Uh,
1,100.
yeah.
So what is total depreciation?
5,600.
5,600. Can we make the property, plant and equipment schedule now?
Yeah.
Okay. So this is cost at start. Can you recall the property, plant and equipment schedule?
It includes the balance in the beginning.
Yeah.
Purchases,
Add.
disposal,
Yeah. Deduct. And then you get balance at the end.
for cost. Yeah.
Then you have depreciation at the beginning. Add purchases minus disposal. You will get balance at the end. And then you have net book value of 30th September. So from this you will deduct this, right?
Yeah.
And net book value on the first date. So from this you will deduct this. Yes?
Yeah.
Can you help me fill the cost on the first date?
It is 200,000, 95,000, and 43,000.
Total
338,000.
accumulated depreciation on the first date.
70,000,
Yeah.
20,000, 13,000, and total 111,000.
Okay. What was acquired?
Fixtures and fittings of 20,000.
Okay, nothing else was acquired.
No.
What was sold?
Motor vehicle 10,000.
So can you give me the balance?
200,000, 75,000. Oh no, sorry.
150.
150 and 33,000.
348.
48.
Come on. Depreciation.
The charge for the year,
Yeah.
it is 8,000 for buildings,
Yeah.
16,500 for fixtures and fitting,
Yeah.
and 5,600 for motor vehicle.
Total
30,100.
yeah. 3,100. Disposal. You've just disposed motor vehicle. Correct?
Yeah.
So now give me the accumulated depreciation on the last date. 78.
44,500.
Yeah, next one.
16,600.
Yeah.
and total is 139,100.
The net book value?
It is 208,900.
Huh? 200,000 minus 78,000 is how much?
Oh, at the
122,000.
okay. Buildings is, yeah, 122,000.
This is
And
7,500. 16,400. Total net book value?
208,900.
Now at the beginning,
At the beginning, it is 130,000.
this is the same one,
60,
right?
yeah,
130,000, 67, 30, and 227. Are you with me?
yeah.
Okay. Can you read the additional information?
The directors now wish to purchase more land. They propose to raise the required finance of 100,000 by the issue of 6% preference share of $1 each or ordinary share of $1 each at par or 5% debenture redeemable in 2024.
Okay. Advise the most suitable option to purchase land. Either they can purchase the land by issue of shares or by issue of debentures, or they can issue ordinary shares. Come on, tell me. If they issue ordinary shares, what will happen?
The ownership would get diluted.
If they issue ordinary shares, they will not have to pay dividend. They will not have to pay dividend, but the ownership can get diluted, right?
Yeah.
Okay. So this will give you 2 marks. If they issue preference shares, then what will happen?
Interest would have to be paid
They
regardless.
would have to pay interest. How much interest?
6,000.
They would have to pay interest 6,000, even if they earn or not, even if they make profits or not.
Yeah.
And if they issue debentures, then what happens?
Also, 5,000 has to be paid regardless of profit.
5,000 has to be paid regardless of earning or not. But if they issue preference shares, okay, their gearing would still be high because they are low risk company. Their own capital would be more than the loan capital.
Yeah.
But preference shares also bears a fixed cost. So anything that bears fixed cost, which is called fixed cost capital, would increase the gearing of the company. And if the company's gearing is increased, that means they are a risk-making company. So you issue preference shares or you issue debentures, both is fixed cost capital. Yeah.
Yeah.
So they will increase the gearing of the company, making it riskier. So you give advantages and disadvantages of ordinary preference and debentures. Are you with me?
Yeah. So ownership won't be affected with um debenture or preference.
Yeah, big main control is with ordinary shares. Here, the decision making power is with the ordinary shareholders. But for preference shares, it's just that they are the owners, but they don't have any decision making power.
Okay.
Ordinary shares and preference shares do not have to be redeemed. but debentures may have to be paid back.
Okay.
Okay, but you do not lose control on ownership. Now advise what they should do.
It
The law,
depends on their existing gearing ratio.
it depends upon their gearing ratio. If they are taking the cost into consideration, then the cost of issuing debentures is less. It's just 5,000 with no
Yeah.
loss in ownership. So the directors can be advised to issue debentures. However, if they do not wish to repay the money in future, other than for winding up, they can issue preferentials. Okay?
Yeah.
The seven
Okay.
marks. So you remember 2 points you should speak about ordinary shares, 2 points you should speak about preference shares, and 2 points you should speak about debentures.
Okay.
Okay, so with this you complete October-November 2018 paper 33. It is a question of property, plant and equipment schedule.